The Chande Momentum Oscillator is an indicator that can be called an overbought/oversold indicator, as well as a momentum and trend confirmation indicator. By default, it's set to a length of 9. Usually going over 50 is considered an indication of an overbought chart, and going under -50 is commonly said to be an indication of an oversold chart. 0 is the midpoint, so naturally values over 0 point to a bullish advantage, and values under 0 point to a bearish advantage. We'll take a look at how well this holds up when taking a look at various uses of the Chande Momentum Oscillator, along with preferred conditions for its application in cases where it fails and/or has limitations. A wide range of real chart examples will be covered from various time ranges. So regardless of when you watch this or which particular charts you choose to apply the Chande Momentum Oscillator on, information presented in this series can be of use to you. Crossing under 0 and staying below it confirms the early development of this downtrend. Stalling at 50 indicates decreasing bearish momentum, but since values remain below 0 and price keeps a steady decline, there's no great indication of a shift towards an upward reversal. That is until reaching extreme low values near -100, which is a strong oversold indication. And normally it would be difficult to maintain selling at these high momentum levels for an extended time. So naturally, there's a bullish reversal range. In fact, an inclined double bottom, which upon completion sees Chande Momentum Oscillator values up near +50 for a relatively long time compared to usual. This is quite normal at stronger parts of a trend, such as the breakout of a double bottom range. Then when the strongest part of the trend is over, it's still possible to have values on the indicator reach near +50, but it'll usually be for a shorter time. And it's not unusual to see values reach just under +50 and quickly reverse to indicate a faster decrease of bullish momentum, especially if price continually fails to surpass an upper range such as this. Now here's the opposite on the negative side of the oscillator. With the gradual decrease of bearish momentum for the downtrend, when reaching and sustaining in the -50 to -100 range for a relatively long time, back to +50, and the uptrend begins to flatten. Price is flat to slightly bearish while the indicator has a steeper decline to provide an earlier indication of the increasingly likely bearish acceleration. Now returning back to extreme low values on the Chande Momentum Oscillator promptly coincides with a rapid halt to the downtrend. The top of this potential bullish reversal range is around 1450, and oscillator values have remained steadily over 0. So when there are more decisive closes over 1450, in a way the uptrend was already being confirmed by the indicator. This gap down does throw things off slightly, but overall it's clear the bullish momentum is still intact with values of the Chande Momentum Oscillator remaining firmly over 0. As to be expected, reaching near +100 indicates the chart is overbought. In other words, unsustainable bullish momentum. But as we've seen before, reaching those extreme values doesn't necessarily mean an instant reversal. It simply points to the slowdown of an established trend. This example begins with an uptrend losing momentum and forming a range near Fibonacci retracement levels, where there's currently interest at the lower boundary of this defined range centering around 127. Then price flattens at this area, and the Chande Momentum Oscillator begins to rebound slightly from these extreme low values. In fact, the indicator's line remains relatively flat, as price continues to close under 127. In situations like this, selling momentum does get exhausted at those extreme low values, but it quickly resumes with a very slight and gradual increase of indicator values. Selling momentum is strong, just not extremely strong like it was when price was falling down onto 127. Now things are more in sync with the indicator rising towards 0 while price remains neutral to slightly bullish. Now here's what appears to be a strong bullish break that confirms the acceleration towards an uptrend with Chande Momentum Oscillator values going over 0. Except there's no follow-through, there's no sustaining an incline of price or the indicator line. Instead, it's quite the opposite, with a clear reversal of price back under 127 and the indicator falling back under 0. A simple way to help with some of these difficulties is to use another oscillator. In fact, this will be the addition of the Awesome Oscillator, which is actually the name of this indicator that's already been covered in a tutorial. During the drop towards 127 and the Chande Momentum Oscillator reaching towards -100, there was a solid 0 line cross with the Awesome Oscillator for extra bearish context. On top of that, all the bars were red, indicating a continued drop below 127 was more plausible. Then once price flattened under 127, there's a mixture of red and green bars, but the values of the Awesome Oscillator still remained below 0. So yes, there was growing bullish sentiment like the Chande Momentum Oscillator was pointing to, but it was still closer to a neutral phase with bars on the Awesome Oscillator rising towards 0 but not crossing over it yet. More weight behind the bullish momentum on the Chande Momentum Oscillator transferring towards the development of an uptrend can more decisively be declared once price continually closes over 127, and there's a positive zero-line crossover with the awesome oscillator. In addition to simply using the 50 threshold search for confluence, when price contacts the boundaries of Bollinger Bands with reversal candle formations that have quick confirmation. Unlike this one where there's immediate negation of the reversal candle pattern and Chande Momentum Oscillator values are unable to contact 50. When strong trends see price hug the boundaries of Bollinger Bands, reversals can commonly take place close to, but not necessarily directly on or outside the boundaries. Though it can still be common to see reversal candle patterns that have quick confirmation and Chande Momentum Oscillator values close to or above 50. Unsurprisingly, multiple elements of confluence tend to form at these historically significant price ranges, which adds to the list of bearish conditions at this current time. However, short-term developments should still be watched closely, especially since price has failed to quickly drive lower. And even though there's no exceedingly high bullish volume, there's still a minor bullish continuation underway, which has the bullish momentum promptly reflected with the Chande Momentum Oscillator steeply increasing. This trend continuation is turning out to be short-lived, with bearish confluence characteristics we discussed earlier quickly emerging to place pressure back on the 86 level, which has a higher chance of being breached now since Chande Momentum Oscillator values are holding under zero. As this decline for price and the indicator are maintained, the downtrend is decisively confirmed. Now we can see this list of confluence characteristics during the formation of minor bullish retracements as steady selling continues. Then as selling diminishes, we can see how even though there's confluence, it's not realistic to expect a major reversal to immediately form all the time. Though it is quite reasonable to expect decreasing momentum of the downtrend, especially in the short term. And on the way up, it's a similar story except in the reverse. For more on indicators as well as Fibonacci methods, follow Ascencore. Thanks for watching and have a nice day.